everybody. Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, AMD, Tesla, NVDA, and Meta. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly which critical levels to watch going forward. We updated many of the levels from our last video, so make sure you stick around because all these levels are going to be extremely important for the future of these stocks. On top of everything, we're also going to go over some economic reports that we can watch for the week ahead and what they mean to the market. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that for the third day of September in which SPY books very strong volume, that volume is to the downside. So we can see this day here, and this day here, which were Thursday and Friday, all in September, and all the three strongest days, and we can see that they were all bearish. Now another very important thing that happened last week, or very critical thing, is that SPY moved below its 100-day moving average. So this 100-day moving average is a line that we have held above since we broke above it back in March, and now that we're trading below it, the next available moving average support is going to be right around 418. The 100-day moving average is very critical because it represents the average price that buyers were willing to buy the S&P or SPY for the last 100 days. And so now that it's broken below, that means that the average price that they're willing to pay now is less than it's been for the last 100 days. So this is a critical line that many institutional traders prefer to use as support and resistance, and when SPY is trading below it, it becomes a resistance. So if you are looking at SPY and you're looking at its daily chart, make sure you draw that line out. It's likely that buyers are not going to feel comfortable again until SPY can move back above that line, because we saw what happens when it can break above it and we rallied on for months. The same thing can happen now that we're below it and we can sell off for months to come. Before we move on and talk about the shorter term time frame on SPY, let's talk about some key economic reports we're expecting for the week ahead. First, we have the PCE report, which is the Fed's preferred measure of inflation. Now, don't forget that last week's sell-off was sparked by the fact that the Fed's held rates steady and inflation has been going up. And so it's very critical that inflation doesn't show another uptick on this report to avoid deepening the sell-off. If inflation goes up, it's likely that markets will react poorly. Now, consumer spending has been going up month over month, which is going to lead us to the GDP report. The final reading of Q2 GDP is expected this week, and it's expected right around 2%, so make sure you're looking out for that as well. While growing GDP does challenge the recession argument, and it means that we are growing as a U.S. economy. Now, a recession means that the GDP was negative for 2 months. We got that in 2022, but since then, the GDP has been going up. Profits have been going down, which is the case we're seeing with a lot of companies, but generally speaking, our GDP has been holding steadily around 2%. So now let's talk about SPY on the shorter term time frame, and then we'll move on to our watch list. Now, SPY on the shorter term time frame obviously looks a little bit oversold. We do expect some kind of bounce this week, but it doesn't necessarily mean that there will be a bounce. So no matter what you think it may happen on the market may go on and do something else. This is why it's so important to watch levels. So here in this case, the next available support for SPY coming into this week is going to be 430. We can see that SPY last week touched 430, but it reversed right at 429.99. So while most people expected 430 to be broken and SPY continues selling off, we can see that 430 reversed right at the spot, just a penny below. Now, here is why 430 is so important. We can see that when we broke below 440 on SPY last week, the sell-off steepened and we lost $10 within just a couple days. This is how important psychological supports are. 430 is definitely a psychological support. It's very unlikely that SPY will repeat this move in just a day or two. It's very likely that they will make it more difficult and more challenging on both sides this week. It's likely that we won't get to see very steady movement. So if you are bearish, you need that 430 break, and more importantly, you need SPY to stay below 430 in order for it to sell off towards 425.80 to 426 as the first downside price target, and the second downside price target is going to be right around 423. Now, if you are bullish on SPY, we are far from bullish territory. Remember, on the very first thing that you need to pay attention to would be this 100-day moving average. As long as we are below that level, that means the bears are in control of the shorter term time frames. So we need to move first above that level, and most importantly above 445.50 in order to regain full-on bullish control. Now that's the level that we need to move back above, because we can see that this is right above this triple top pattern. So leading into the Fed's event last week, we created these 3 sets of lower lows, and if you were paying attention, you could have caught this sell-off. We caught multiple puts, we caught multiple fantastic positions on the market last week. If you do want to check us out, make sure you check out the link in the bio. But for this specific scenario, you can see that when we needed to move back above 445.50, we needed to do that because it would be back above this triple top pattern and the buyers would be regaining that control. Now let's move on to the next stock on our watch list, which is going to be Apple. So Apple, first of all, let's talk about it on the daily candles. We can see that Apple, like SPY, is currently trading below the 10, 20, 50, and 100-day moving averages. Those are all key supports that were working as strong places of reversals for Apple all throughout its rally throughout the year. And now that it's moving back below it, that means the sellers are in control. So here, in this case, let's talk about Apple on the shorter term time frame. If you are bullish on Apple, you first needed to move back above 180.80 in order for it to regain some kind of footing, but it's not going to be fully bullish until it crosses back above 190. This is the level in which Apple got rejected at strongly in the beginning of September. You can see that strong break back down, which makes that the very strong resistance that you need to watch. To the downside, if you are looking to play puts or short Apple, you need to see a break below 170 in order for us to see the first downside price target of around 169 and the second price target of 162 to 163. The next stock on our watch list is going to be AMD. Now AMD is sitting right above its 200-day moving average. So we already talked about what happens when you break below the 100-day moving average. Remember, SPY broke back below it last week, and now AMD, after breaking back above or below that level back in September, finally is meeting that 200-day moving average. So a couple things can happen here. AMD can reverse off of this spot as it did so here, or it can break below it. Now chances are, because it reversed last time, it's unlikely to reverse this time around. But this is why we pay attention to levels and not just what we expect to happen. So here in this case, AMD first, if you are looking at the downside, you need a break below 93, which is going to be below this 200-day moving average as well. So below 93, AMD is going to be on its way down to a price target of around 89 and a second price target of around 81. Now to the top side, AMD needs to recover back above 103.90 in order for it to regain a level towards 112. So that would be our first upside price target, or if we're in calls with our group, we would take profits right around 112, and the second price target is going to be around 119. Now remember, these price targets are a bit aggressive, so if AMD moves to the downside or to the upside, make sure you're giving yourself some time, especially if you're swinging the stock. Now the next stock on our watch list is going to be Tesla. Tesla saw a very ugly downside break yesterday. Although Tesla was climbing week over week, you can see that the RSI never climbed above 70, and the RSI measures the relative strength. So a lot of people use the RSI to see if a stock is overbought or oversold. Yes, that's a good way to use it, but it primarily measures strength. And so we can see, for example, here's an example of a negative divergence on Tesla. While Tesla was making higher highs, you can see that the RSI was making lower lows, and that ultimately broke Tesla back down, and you can see Tesla sold off for weeks after. Here the RSI is even lower, and you can see Tesla is selling off once again. So let's talk about some shorter term time frame levels on Tesla. If you are bullish on the stock, you first needed to move back above 160.80. Now to the downside, for Tesla to continue this sell-off, it needs to break below 241.85. Below that level, it has a second price target of 235 and 228. Above 260.80, Tesla has an aggressive bullish target around 274, and the second price target would be around 279. Now the next stock on our watches is going to be NVDA. To our surprise, NVDA is back near 400. We expected this stock to actually rally through the end of the year, But we are in September. You never know what happens over the next 3 months. Let's talk about NVIDIA on the shorter term time frames and see what's going on with the stock there. So if you are bullish on the stock, it is not far from bullish territory or re-entering bullish territory. It would just need to move above 422.40 in order for the buyers to take control and move it back towards 440 to 444. Once again, these are aggressive price targets. So if you are taking this position, make sure you're giving yourself plenty of time if you're doing options. And also, if you're getting into the stock at the break of 422.40, you would need a stop loss just below that point in the case that that breakout fails. To the downside, if you are bearish on NVIDIA, you need to move below 396.30 in order for it to move to an aggressive downside price target of around 373. This downside price target is very aggressive because this would be below the 100-day moving average. We've already explained how important these moving averages are, so make sure you have them plotted on your chart. Last but not least, let's talk about Meta. Meta has been an all-star. It has been one of the only stocks that has not broken below a very key moving average like the 100-day moving average. You can see that for the last few weeks it has been just flirting with that 50, the 10, and the 20, but it hasn't gotten a clean break. However, let's talk about Meta here, and we can see that it is clearly creating that same type of pattern we talked about earlier when we talked about SPY, which is the lower high pattern. You can see that Meta got rejected here. On its attempt back up, once again got rejected, and on its attempt back up, once again got rejected. So it is making lower highs and lower lows. And so if Meta this week, likely chance, if it tests 292, it's going to be a very sharp downside move towards 285 to 286. And if you catch puts, and we plan on doing so in our group, you're going to have a very profitable trade. Below that level, Meta can see 276 to 278. Now to the top side, Meta needs to move back above 308.10 in order to regain some kind of bullish footing, and that's back above this level, which means that if Meta moves above that level, it would start making higher highs, and it has the potential of breaking that topside rejection at 313.30, and then a bullish price target would be around 318 to 319. So that wraps up all the stocks on our watch list. I hope you guys enjoyed this video. Don't forget to subscribe and like.